Okay, we're going to do the last chapter of the section 2, Book of Prime Entry. Book of Prime Entry also called Book of Original Entry. This is the area to cover advantage of using the different book for the recording and how is the process to transfer the data in the Book of Prime Entry, hosting to the ledger entry, and differentiate between trade discount, cash discount. This is more toward on the cash. For the cash book and petty cash book, cash book is for the recording of the cash transaction involve the cash and the bank account. Sometimes we call 2-column cash book, sometimes we call 3-column cash book. The cash book is a book of prime entry because it's written up from the business document. It also part of the double entry system because it's act as a ledger account for the cash and the bank. So we go to the, before we do the cash book, we need to understand about the discount. What is the difference between trade discount and the cash discount? Trade discount is a discount given to the customer in order to encourage for the bulk purchase, buy more. Sometimes also because the customer with you for a long time is a loyal customer, then you also can give to them. Cash discount. Cash discount is a deduction from the invoice for payment made within the period allowed, which is to encourage the prompt payment. Trade discount. Why we give trade discount? Helps save cost of reprinting the expensive catalog each time the cost of production change. Encourage a particular customer to buy more. The key thing is to buy more. Okay. Next is help business to make profit when they resell the goods at the list price. What determines the amount of the trade discount given? Depending on the quantity that you buy and whether you are a regular customer or not regular customer, the nature of the goods. If the goods can sell faster, then it's unlikely. But if the goods cannot sell faster, normally have a high trade discount. Cash discount got two types, which is discount allowed and discount received. Discount allowed is a discount given to the trade receivable or customer when customer pay within credit terms set by the business. It is an expenses to the business. Discount received is a discount received from the trade payable supplier when the business pay within credit term set by supplier. It is an income to the business. In terms of the accounting entry for the trade discount and the cash discount, trade discount, no accounting entry to be recorded in the ledger. It is not part of the double entry system. Record in the special journal. What is meant by the special journal? In your just now, the journal that we learned, sales journal, sales return journal, purchases journal, and purchases return journal. So this is the 4 books that we record the trade discount transaction. Cash discount. Discount allowed, we will debit discount allowed, credit the trade receivable, which is the customer. Discount received, we will debit trade payable and credit the discount received. So this cash discount, we have the double entry, which is for the accounting recording. This one got accounting recording. But trade discount, no accounting entry in the ledger, only record in the special journal that I mentioned in this form. Okay, let's continue. Okay, cash book. What is a cash book? Cash book is for us to record cash transaction involve cash and the bank. Cash book is a book of prime entry because it's written up from the business document. The cash book is also part of the double entry system as it acts as ledger account for the cash and the bank. So how to prepare and what is the advantage of it? What are the advantage using the cash book? The cash book reduces the number of entry in the ledger. One person can be put in charge of the book. Thus, we increase the efficiency. Efficiency means that the person can do faster and faster. Reference to the cash and bank account is made easier with the use of a separate book. So when we want to check or reconcile, it will be easier. In the cash book, sometimes we will see the dishonor check. Dishonor check is a check that the bank refused to pay. When we give to the bank rejected it. Maybe due to the insufficient fund. There's many reasons why the bank refused. One of it could be insufficient fund, not enough money. Or maybe the way that we recorded the check and write the check wrongly put in. Wrong name, wrong number also can be happen. Okay, let's move on. This is a format for the cash book. Debit side, we have 3 columns. Discount, allowed, cash, and bank. So that's why we call 3-column cash book. Detail. This is the debit. This side is a credit. So this is like a big T that we learned. This is a big T that we done. Okay. So in the debit side, when you have the balance brought down in the debit side, it means these two are the asset. If there is any sales, it should be in the debit side because you receive the money. If there is a contra entry, so this contra entry meant for that. From this contra entry, if we look at this 100, from the bank point of view, bank receive money from cash on 21st. Well, in here, this one from the cash point of view, cash account giving up 100 to the bank. There is a transaction of it. And come to the balance carried out, that which I need to highlight. Balance carried out for the cash account, cannot be in, never in the debit side, because cash cannot be in here because we cannot have the overdraft for the cash. Cash balance what now must be in the debit side only. This is must be in the debit side. Balance carry, balance what now for the cash must be like this. But for the bank can be debit, can be credit, depending on the question that you have. Sometimes it's a balance carry down debit, credit will be the balance brought down. This one will be bank overdraft. If it's in the debit side, balance brought down, that means it's an asset, current asset to the business.